Hello guys, today we will start the unit foreign exchange rate and balance of payment. Then first we will start the foreign exchange rate. Then foreign exchange rate refers to the reserve of foreign currencies. For example, currency of US and UK are the foreign exchanges for India. Foreign exchange rate refers to the rate at which one unit of domestic currency is exchanged with the number of units of currency of another country. In simple words, we can say the price of one currency in terms of other currency is known as foreign exchange rate or exchange rate. For example, rupees 60 are to be paid to buy $1. Then exchange rate is $1 is equal to rupees 60. There are various types of exchange rate system. Here we are discussing the three: fixed exchange rate, flexible exchange rate, and one more is there, that is a managed floating. Fixed, flexible, and managed floating system. Then first we will try to go with the fixed exchange rate system. Then fixed exchange rate system are those exchange rate systems which is determined by the central bank of a country, and the changes can be made by the central bank only. To define the fixed exchange rate system, there are two methods should be there. The first one is the gold standard system of exchange rate, and the next one is the Bretton Woods system of exchange rate. When we will go with the gold standard system of exchange rate, then gold was taken in this system as the common unit of parity between currencies of different countries in circulation. Each country was to define the value of its currency in terms of gold. But when we will go with the Bretton Woods system of exchange rate, it was held in one of the conference of the Bretton Woods in 1944, re-established a system of fixed exchange rates. This was different from the international gold standard in the choice of the asset in which national currencies would be convertible. Under this system, countries were required to fix their currency against the US dollar. International Monetary Fund was delegated with supervisory role under the system. There are various merits of fixed exchange rate system should be there. Then we try to discuss the merits of fixed exchange rate. It ensures stability in exchange rate. Due to certainty, it promotes foreign trade. It promotes capital movements because it doesn't involve any uncertainties about exchange rate that may cause capital loss. It prevents capital outflow. It stops speculation in foreign exchange market. It helps the government to check inflation. Instead of the merits, we have demerits also. Then, if we will try to go with the demerits of fixed exchange rate system, then the various demerits are: it requires high reserves of gold. Huge gold reserves hinder movement of capital or foreign exchange. It discourages the objectives of having free markets. It may result in undervaluation or overvaluation of currency. It may not be the market equilibrium. An economy following this system may find it difficult to combat either depression or recession. Here two terms are there: overvaluation of currency and undervaluation of currency. Then first we try to see the overvaluation of currency. It is a situation in which the exchange rate of a currency exceeds what the open market is willing to pay. But the undervaluation of currency is a situation in which the value of currency is lower than what is expected in the exchange market. Overall, we can say about the fixed exchange rate system has been discontinued because of the many demerits of the system by all leading economies of the world, including India. Now, the next exchange rate system is a flexible. Then we try to go with the flexible exchange rate system. Then it is that rate which is determined by the demand for and the supply of different currencies in the foreign exchange market. The various merits of fixed exchange rate system are: With various merits of flexible exchange rate system are: with flexible exchange rate system, there is no need for the government to hold any reserve. It eliminates the problems of undervaluation or overvaluation of currency. It promotes venture capital in the form of foreign exchange. It enhances efficiency in resource allocation. There are various demerits also. It creates a situation of market instability. International trade and investment is discouraged due to the uncertainty caused by currency fluctuations. It encourages speculation even. Now the third system or type of exchange rate is a managed floating. Managed floating system is a mixture of a flexible exchange rate system and a fixed exchange rate system, wherein exchange rate is determined in the foreign exchange market freely by the market forces of demand and supply. Overall, excessive fluctuation is checked by the central bank. Managed floating is also known as dirty floating. If a country manipulates the exchange rate by not following rules and regulations. Okay guys, thank you very much.